Is it visible to you all?
Yes.
Yes, sir.
Right. And I hope that you have this handout also with you all. First of all, let me apologize for not having the class on the 11th, as I was totally not well during the whole week. So from Monday, I was not well, so I couldn't make it. Let's try to have it at a different date, but what I thought was since these 2 hours might not be sufficient for us to continue on that SLFRS 9, so let's do this LKS 1 and then we'll move on to SLFRS 9. So this is again another accounting standard which we need to know about, and this is known as LKS 1, which talks about the presentation of financial statements. So you have to be very clear about this topic because it mainly have contents relating to your question number 1, which is the compulsory question. So you need to know the structure of your financial statements, how you need to prepare your financial statements as per the guidelines provided by LKS 1. Okay, so that is what we are going to learn. Starting off with, let's look at the main objectives of LKS 1. It prescribes the basis for presentation of general purpose financial statements to ensure comparability both with the entity's own financial statements of previous periods and with the financial statements of other entities. So why LKS 1? LKS 1, the objective of LKS 1 is mainly to look after the general purpose financial statements, which means the people, not everybody will have access to financial statements. Now, since you all are being in the banks, you must be knowing that the banks are required to publish their financial statements once in every quarter. Now, until you publish your financial statements in the newspapers or maybe in your web page, website, in any form, the shareholders, that is the owners of your company or any other user. Now, we have already learned in our first topic, you have learned who are the users of financial statement. Now, all these users of financial statements does not have access to these financial statements directly because they are not part of your organization. So unless your employees, if you are an employee, you of course have access, but that is also very limited. Okay, maybe your finance department or maybe your accounts department who is preparing these will have direct access, but all other will not have access to the financial statement. So what we are looking at here is any information that is accessible to the users of financial information that will become a general purpose financial statement. So when you are preparing a general purpose financial statement, you need to be mindful that this is again another feature that we learned. It should be something which is comparable. When you say comparable, the comparability depends on 2-3 factors. One is you might want to compare your own results. That is how you have performed in 2020 and how you have performed in 2019. So which means these two must be comparable. If you want to analyze your financial statement, they should be in a position where it is comparable. So that is one aspect. Then you might want to compare it with your competitors. Now say if you are ABC Bank, then you want to compare your financial statements with PQR. So ABC Bank and PQR Bank, though both should be preparing the financial statements which are in similar form so that you can compare. So when you look at the third aspect is, of course, you can go on and compare across industries. Now you can compare apple with apple. That is, you compare your bank with another bank, or you can compare your bank with any other industry, the companies which are operating in the industry. Still, those also should be in a form which is easily comparable. So the comparability becomes very important in terms of measuring your own performance with prior periods and also with other entities. Those two are very important. So when in the exams, if you are asked or tested to say that what is the objective of LKAS 1, this is what you have to say. Okay. So it also sets out the overall requirements for the presentation of financial statements, guidelines for their structure, and the minimum requirements for their contents. Now, when you start doing question number 1, still we are not have come to that level. We need to cover up SLFRS 9 also before we go into that. We have to have an idea about how my financial statements must look like. What are the items to be included? What are the minimum information I need to provide to the reader? So all these are provided by LKAS 1. But of course, you know that banks are governed by the regulator, which is the Central Bank of Sri Lanka. So banks always try to comply with all the reporting requirements of Central Bank first. Then if mostly the banks are listed, so the next criteria would be to fulfill all the requirements as per the Colombo Stock Exchange. So those two are the regulatory bodies as far as the banks are concerned. Now for other companies, they will have the Colombo Stock Exchange rulings. But for bank, the additional requirement is where they are governed by the Central Bank of Sri Lanka, and you need to fulfill those reporting requirements as well. So when I say minimum requirements, these minimum requirements might differ from a bank to a trading organization. Banks might have to provide some additional information which is not there or available with a trading organization, and mostly with regard to the structure. Now I will show you after this during the lecture. I will show you some financial statements prepared by some of the banks, which will give you an idea of how the financial statement will look like. Okay, right. Then, as usual, we will have to look at some definitions. So what is general purpose financial statement? Financial statement, those intended to meet the needs of users who are not in a position to require an entity to prepare reports tailored to them. So as I told you, general purpose financial statements are available for people who does not have access to the organization to get information then and there, are known to be general purpose financial statements. Okay. So the purpose of the financial statement. So earlier what we looked at was the objective. Now we are looking at the purpose of the financial statement. So the purpose of the financial statement is to provide information about the financial position, performance, and of course the cash flows. Right. So let me make this clear to you all. Now, when you look at, I hope the board is visible to you all. So when you are trying to present your financial statements, these financial statements look at three aspects. So let's say you are the organization or you are the entity. So when you are looking at your organization, as you know, you have your own assets, liabilities, and equity. So, which is an indication of your financial position. Financial position. We sometimes we call that how much of money you have. That is your financial position. How much of investments you have. That is what my financial position is. Sometimes we say I am in a poor financial position, which means I'm short of money or I'm short of cash. So financial position is very important as far as an organization concerned. So LKAS 1 tries to establish this piece of information to the reader. Okay, right. What is next? Now, depending on this financial performance, financial position, now you are performing. Performing means you are doing a business, or you are, if you are a bank, you are accepting deposits and you are giving loans and you are doing a lot of financial services. So now you are exposed to your business. Now the business has to be evaluated. The business has to be evaluated end of the day. So which means your financial performance. Which is your financial performance. How much of profit I have earned? How much of revenue I have derived during the year? What are my expenses? How much of a loss or profit I have made? And how the profit has been achieved? What was my profit last year? What is the profit this year? How much of a growth I have, or how much of a decline I have had? So there are a lot of things in terms of financial performance of a company. So we have looked at financial position, then financial performance. Now these are all in terms of numerical. Numerical in the sense we talk about numbers. Now say recently you know that there are a lot of banks who have achieved 1 trillion assets. So that's a big achievement. That's a achievement in terms of financial position. And some companies, they have achieved profits over 10 billion. 10 billion, I'm talking about 10 billion. So that's a big achievement. Not only banks, there could be other companies also. So that's a big achievement in terms of financial performance. So profit is in terms of financial performance. We are talking about assets. 1 trillion means that is in terms of financial position. Profits, 10 billion means in terms of financial performance. Now, having profits, having financial position like assets of 1 trillion does not mean everything to the business. The business must have adequate liquidity to take on and continue with the business. That is what we call as going concern. So when you say going concern means we foresee that the company will continue for the coming years. We don't limit that company into a certain period, because the financial statements are prepared on the basis of going concern. That is, you assume that the company is going to continue for the near future. We don't know when it is going to end. So if that is the case, like the position, the performance, the company is also concerned about its cash flows. Its cash flows. Cash flows means the money that is coming into the business and the money that is going out of the business. So we call these two as inflow or cash inflow and cash out. Okay. So basically, if you look at an organization, LKAS 1 tries to establish these three pieces of information: financial position, performance, and also the cash flows. Are you clear with that? Because this is the essence of LKAS 1. You need to understand. Why LKAS 1 is there? Because that is what tries to establish this fundamental principle. Every organization must produce financial information relating to its position, performance, and cash flows. By the way, this is what the question number 1 and maybe another question of your examination. So these two, most probably your question number 1, and this could be a separate question, maybe every year, or maybe, sorry, every exam, or maybe every other exam. Because this I'm not sure whether there will be. But this, of course, yes, because that's a compulsory question that you have. So definitely you have to prepare. So in addition to that, you also have a third statement, which is called the equity statement. That is your equity position. Right? So those three form your question number 1, and this will be somewhat a separate question. Okay? Right. So with regard to the purpose, that is what the purpose. And why you need all these information is because based on these only you are going to make economic decision. Economic decision means a decision that you make for the future for gaining a monetary value. There has to be a monetary benefit with your economic decision. To reflect the results of management stewardship of the resources of the entity. So now here the term management stewardship means how the company is being managed. Now there are board of directors, there is a corporate management. So how these people are managing their business. We call that as corporate governance. We call it as with another name, which is known as the corporate governance, because governance has become very, very important for organizations in today's context, right? There are a lot of rules, directions that are governing the management of an organization, especially with related to the board of directors of an organization. Even it goes on to the extent of tackling with certain corporate management members also. Okay, so this management stewardship is where the governance of an organization. So the governance of the organization is a reflection in these financial statements. If you are managing your resources or your company properly, then it should get reflected in your financial statement. If it is going on the wrong path, obviously you might make losses, there will be negative cash flows, a lot of issues will come. Now let's look at what a financial statement must provide. As I told you, the fundamental information. How much of assets you have, what are your liabilities, what are your equity components, what are the income and expenses items in your performance statement, then how much of capital has been introduced by your owners and what you have paid to the owners, and of course the cash flows. Okay, now we look at what are the complete set of financial statements. So a complete set of financial statements include a statement of financial position, and please be remember that a statement of financial position was earlier called as the balance sheet. Okay, so we will use the term balance sheet when we are writing about this particular statement, but when you are preparing financial statements, we don't name them as balance sheet now. That term is no more, right? With the introduction of LKAS 1 and later on with LKAS 32 and 39, the name of balance sheet is no more. We call that as the statement of financial position. And it is as at a particular date. Now, this is one of the mistakes that the candidates do. They prepare the statement of financial position, but they don't know it is for a particular date. Now, P&L, you prepare it for a period. That is why we talk about a period of financial year. So you prepare the financial statement of the P&L is prepared for a period which is generally a year. But balance sheet is as at a particular date. That is why we say as at the end of the reporting period. Now, if your company is following a financial year of 1st of Jan to 31st December, then it is a company which closes at 31st December. But there are companies who may close at 31st March. Now, that is what we are closing up now. The 31st December companies have already prepared and most of them have published their financial statements now. But the next set is coming up, which the companies which will be closing their financial year on 31st March. So then they will start preparing their financial statement thereafter. So the statement of financial position is actually for a particular date, and it is mostly the end of the reporting period. A statement of profit or loss and other comprehensive income. Now this is basically your P&L. But now your P&L will have two components. That is what we are indicated here. One is your profit or loss, which is directly from your business. And there is another element which is known as the other comprehensive income. Please remember this term, because from here onwards we will be using this term regularly. Other comprehensive income. Now this other comprehensive income is another component which is part of your overall financial performance, but not merely through your business performance. These are like other additional features which are contributing or might contribute to your performance in the future. Say, for example, these revenue sources or these items will be reflected in your equity statement. Equity statement. So when we do the financial statements, you will remember or you will understand these are components of your equity statement, but it will be shown as part of your P&L and then it will be taken to the equity statement, which we will do in the class. Don't worry. So the P&L or the statement of profit or loss or other comprehensive income is for a particular period. That is 1st of Jan, let's say 2020 to 31st December 2020. As I told you, then a statement of changes in equity, which is again for a period. A statement of cash flows, which shows your income inflows and outflows. Again, it is for a period. And also, now in examination, you will be asked to provide workings. Sometimes you are asked to provide show workings. Likewise, in preparing financial statements also, readers must be provided with additional information. So what do? We provide them something called notes to facilitate understanding of the financial statement. Then we also provide, which we have already learned under LKAS 8, significant accounting policies. These accounting policies are the ones which are governing the preparation of financial statement, because your accounting policies will specify what and what assumptions that you have made. What are the accounting standards that you have applied in preparing the financial statement? So all those information will be available. I will show you a part of the accounting policies, but if you go to a company's website and find out their latest financial statement, you can find out how lengthy these notes and the significant accounting policies to the financial statements. Then now there is a trend in companies where people provide a descriptive about your financial performance. Now we are talking about numbers all the time. This amount of profit, this amount of assets. But people would like to hear as a story, or maybe like a like an essay. You would like to read the company's performance or what they have done during the year by way of like a story. So that we call it as a financial review, which is done by the management. Now this financial review has become very, very popular in the recent past, where almost all the companies provide a financial review, which is like a snapshot of their performance in terms of a write-up. So what should be included? Mostly we talk about the factors or influences that determine your performance. What are the changes that have occurred in the environment? What are the actions that you have taken towards that? And what are the policy changes that you have made? So for example, I can give you a classic example during these days. That is the impact of COVID-19. Now, almost all the companies are struggling this maybe last financial year because the impact of COVID-19 is yet to be materialized in full. Some companies have been already impacted, but for the banks, it is yet to come, I would say. So the banks have been impacted for the time being, where their cash flows have been very much impacted. Why? Because of the COVID-19, majority of the businesses were given moratoriums. Moratorium means where you give a concession to the borrower to delay the payment of loan installments, right? So as per the central bank guidelines, those were provided to prospective customers. But as a whole, if you look at this COVID-19 pandemic, had a lot of influence or impact in the financial performance of companies. So a lot of companies might talk about this COVID-19 and the impact of COVID-19 in their financial statements this year. You might have already seen what those companies have said, those December companies, which is already available. You can go and read those if you have time. They will talk about the COVID-19 mostly. And even if you look at the companies which are about to publish or prepare financial statements as of 31st March, might also give you the same impression, because they might mostly talk about the impact of COVID-19. Okay. Likewise, the companies will have to talk about the factors or influences that determines their performance. Secondly, their source of funding, or the policy on gearing and its risk management policy. These are very important terms. Now, source of funding means how they get money, whether they are going and borrowing from another company or maybe another financial institution, or they are getting a credit line, like the banks get their refinances from an apex body like ADB or maybe central bank, those type of funding reliefs. Or how geared they are. Geared means the level of borrowing, to what level they can go and borrow. Or in a situation like this, how the company manages its risks. You know that there is a lot of risks. Now, one of the prime impact of COVID-19 would be that we might foresee a lot of non-performing loans propping up, because the impact of all these moratorium and COVID-19 impact will come in the future. So as a company, how you would foresee this risk and how you will mitigate it. And of course, you can talk about your strengths and resources. Mostly, these are not covered by any standards. Now, say for example, if you have a strong employee pool who drives your performance, that is your strength. That is your strength. And most of the, let's say you take a bank, and if this bank is running on all its own premises, they are not on rented premises, that's again their resource, because they are avoiding the payment of rent to these properties. Okay. Likewise, you can talk about your strengths and also resources. So next is where you are required to have fair presentation, and you need to be compliant with all the SLFRSs and the LKASs. Okay. Right. Now let me explain this first, and then we'll go to the next topic or the. So accounting standards have been set by an international body, which we call as IAS. International Accounting, IASB actually, International Accounting Standards Board, IASB. They are the ones who are setting all the accounting standards using representative from across the globe. There will be a lot of accounting experts who will sit down and develop these standards. So these standards will be then localized to each country's own preference. So in Sri Lanka, the standard setter is the CA Sri Lanka or the Institute of Chartered Accountants of Sri Lanka. So they are the accounting body who sets accounting standards in Sri Lanka, right? So the accounting standards have been devised or customized according to the requirement, the restrictions or regulations that you have in Sri Lanka. They will customize. They will pick it from the main and they will customize. So ISB will put out currently we are having two sets of accounting standards, which we call it as IAS. The other one is IFRS. So which means International Accounting Standards, and the other one is International Financial Reporting Standards. IFRS stands International Financial Reporting Standards, and this is International Accounting Standards. This is IASS, actually no S actually, that is to indicate there will be several standards. So IASS and IFRS. So based on these, the customized versions of IAS and IFRS is LKAS and SLFRS. You see? So what is mainly happened here is IA has been replaced with LK, which is the universal ISO code for Sri Lanka, and IFRS has been named as, IA has been taken again and put SL. So Sri Lanka Financial Reporting Standards and LKAS is Lanka Accounting Standards. So we don't call it as, but mostly these two are the accounting standards. So Sri Lanka is the accounting standard setter, the body of accounting standard setter. So your financial statements are audited by the experts who have qualified through the Sri Lanka. Those are the ones who are mostly auditing, the audit firms that are governed by this body. Okay, so what we were trying to understand here is so you have to comply with all the SLFRSs and the LKAS in your financial statement. This is very, very important. It doesn't mean that you need to comply with all the accounting standards on earth. No. As you remember, there are certain financial accounting standards which are not relevant to the company. For banks, it will not be applicable. So, whatever the standard that you have chosen for adoption in your financial statements, that has to be covered in full. You can't take part of it and you can do whatever that you want with the balance. No. You have to comply with whatever the standards that you have chosen for preparation of financial statement. So, you have to comply with all the SLFRs and LKSs, and that needs to be explained in your accounting policies. All relevant SLFR LKS must be followed in compliance with the original standard, and it has to be presented. If you have used an inappropriate accounting treatment, then you can't just rectify it by putting a note in your financial statement. Okay. Now say you are applying LKS 16, but you are not following it 100%. So the reasons for not following it 100%, you can't come and give a reason for it. That is not correct. The accounting standards body or the auditors will not accept it. That is what it means. So LKS 1 is principally talking about you have to comply with SLFRs and LKSs that you have to disclose, or all relevant SLFR LKSs must be followed if compliance with is disclosed, and if you are not using the standard proper, then you can't escape from that by putting a note in your financial statements. Three important steps. First, you have to select and apply your accounting policies. Secondly, the presentation of information in a manner which provides, you already know, relevant, reliable, comparable, and understandable. The four important factors. When you are presenting financial statement, it has to be relevant, reliable, comparable, and understandable. This applies to you also. When you are writing answers in your examination, you have to write relevantly, you have to write with reliable information. Of course, it need not be comparable, but most importantly, it has to be understandable. Okay. And also, there could be additional disclosures, additional piece of information that might be required to be furnished to substantiate your financial statements. Sometimes you might not be able to explain certain details through numbers. So you might have to provide additional information to cover up that explanation. I'm not going to talk about offsetting. Offsetting is mostly used in companies where it is provided. Okay. Now, in your case, this is actually something which happens practically when you're doing the business. Okay. Sometimes what happens, there are instances where you are permitted to offset. Okay. For example, the income and expenses. Income and expenses can be offset. Offset means you add the two or you deduct one from the other. Okay. Right. Now let's take some examples. Now, there could be instances where the standard will permit that. Then, of course, you can do it. But there could be certain instances where you might know. Say, for example, now since we have learned, you are disposing an asset. When you are disposing an asset, let's say you have two assets, asset A and asset B. So, when you are disposing to these two assets, let's say when you dispose asset A, that is a fixed asset, you get a profit of 50,000. When you dispose asset B, you have a loss of 20,000. So in one asset, when you dispose, you have a profit of 50,000, and in another asset, you have a loss of 20,000. Now in financial statements, you don't need to provide this as two separate items, where you will show profit on disposal of assets as 50,000, loss on disposal of fixed asset as 20,000. No. You can offset these two. What do you mean by offset is, now I will say in the financial statement, profit or loss on disposal of fixed assets, and I will show 30,000. Let me put it on the board so that you will understand. Now, fixed assets, let's say you have asset A and asset B. So you dispose this, and you have a profit 50,000. You dispose this asset also, you have a loss of 20,000. Now in the financial statement, you will go and show profit on disposal, 50,000. Then another line, loss on disposal. Right? What this means is, you don't have to do this. You are permitted to offset these two. How do I do it? I will say profit stroke loss on disposal. And this is 50,000 profit, this is 20,000 loss. So the net is 30,000. You see? This is what I am trying to explain. So there is a profit, there is a loss. So if you want, you can go and show it like this also. There is no problem. In examination also, if you want, you can write two lines and show the profit separately and loss separately. But what does this LKAS 1 says is, there is a option for you to offset these two. Offset these two and show it like this. Now say for example, for a bank, you have interest income, that is from your loans, and you also have interest expense, that is from your deposits. Now can we offset these two? Can we offset these two? That is not permitted. Right? That is not permitted. So you have to be very clear what can be offset or what cannot be offset. That is very important. I see a message that there is no handout here. Is that the case? I'm sorry about it. Can I get a feedback, please?
Yes, sir.
You have the handout?
No, sir.
Let's see. Oh, that's a. Just give me 2 seconds. PDF file they put them, mama. I'm extremely sorry about it. So they will check and upload. But for the time being, if you see the, I mean, based on the slides, you just make notes. Later on, you can copy it to your handouts. I'm extremely sorry about it. So, as I told you, the income and expenses or the gains or losses could be offset only when it is permitted by the accounting standards. Okay, and you can do it for items such as these, like the profit or loss on disposal, which are not material. Those can be offset. So comparative information you have to provide. As I told you, I will show you how the comparative information will be provided, and you can also provide it in a narrative form, like you can write it in a paragraph and say this is how the comparative is used also. And disclosure of accounting policies. So I will show you how these will be reflected in the financial statement, the policies, because policy plays an important role as far as your financial statements are concerned. So you need to be mindful about how these financial statements are prepared and what are the governing policies under each financial statement. Just give me a second. Just go in there. Oh. Oh, Nahari. Oh. Ne alutia kewa mama. Ane develop wala ne. Ne. So now we come to the structure and content of financial statements. Right. So let's see. Now we spoke about the financial statement. So you know the balance sheet is now statement of financial position, SOFP. So we might use even in examinations. First, you have to write this statement of financial position, and you can name it as SOFP. And then using it as SOFP, you don't need to write statement of financial position all the time. Then we have the P&L statement. This P&L statement has undergone a lot of changes. People tend to call it as income statement, some people call it as profit or loss, some people call statement of comprehensive income. So a lot of names are given. But the expected standard form is statement of profit or loss and other comprehensive income. Okay, statement of profit or loss and other comprehensive income. But still, if you go to your examination question, they will ask you as statement of comprehensive income. Statement of comprehensive income. So which means SOCI. SOCI. Statement of comprehensive income. But if you look at this part, other comprehensive income, that is known as OCI. This is what I was referring. Please note. Statement of comprehensive income is the entire P&L, which includes, the profit or loss and the other comprehensive income, both. So in the examination, you might see this name. Don't get confused. Don't get confused just because you see this. I'll see whether I can show you this. Okay, so I'll show you a paper. Now this is September 2017 question paper, right? I'm just taking one, but it will be the same, right? Where this is question number 1. Now you will see there is a trial balance given. Then there are some adjustments. And this is the most important part. You see, Look at this section. The section that I highlighted. Have you see that, right? Is it visible to you all? You all can see this?
Yes, sir.
Right. I'm just highlighting this. So sorry. I'll just highlight to this point. Now you see, prepare following financial statements and calculations for Saturn Bank PLC in accordance with Sri Lanka accounting standards and compliance with applicable banking regulations. You must clearly show all calculations and workings. What is the requirement? Look at the first part. Statement of comprehensive income for the year ended 31/12/2016. So they call it as statement of comprehensive income. That is what I wanted to highlight. Then the second part, of course, you see the statement of financial position. Third part, statement of changes in equity. So going back to the first point, that is they want you to prepare a statement of comprehensive income. Now, what is this statement of comprehensive income? That is what we have been talking about. So the statement of comprehensive income should have the statement of profit or loss and the other comprehensive income. Okay. So companies can prepare this in so many ways. They can show this profit or loss separately and then other comprehensive income separately, or then you can bring the both together and show it as a statement of comprehensive income. Right? But for exam purposes, we will learn how to show the entire thing in one statement. That is statement of comprehensive income. Okay? So it's there in the handout, it is explained, but don't go into details. What you need to remember is this statement of comprehensive income. That is what is relevant to you even in examination. That is what you need to follow. Okay? So that is what you need to prepare. Right? So that is about the structure and content. Then how items are disclosed. Now this is again very important because the standards require certain items in the financial statements to be shown on the face. We call it as on the face. On the face means that the line items will appear on the financial statement. Certain items can go to the notes, or in our terms, if we say that those are like workings. So in preparation of the financial statements, you have to be mindful that the financial statements have to be prepared based on the guidelines provided by the accounting standards, or maybe the CA Sri Lanka or the Central Bank of Sri Lanka in the case of banks. So the guidelines are very clear what needs to be shown how. So we have to follow that structure in terms of preparing the financial statements. Okay, we call that certain items must appear on the face, which is a must. You can't take them and show it in the notes. That is not recommended. So you have to follow that even in examination. Now what candidates will do is they will forget certain items to be shown in the financial statement. I will show you how you can structure these in for the examination, because it's very important. Some of you might have already done this for your other examinations, like for A levels, or maybe for if you are doing any professional exams. But this examination follows a certain structure. So you have to comply with that also. Now look at these information. LKAS 1 requires disclosure of the following information in a prominent position. They want to see the name of the reporting entity. That is, whose financial statements are prepared. Whether it is ABC Bank or PQR or whatever, you have to show the name. Then you have to say whether this is for a single entity or for a group of entities. Single entity or for a group of entities. I will explain it. Then you have to show whether this is the date of the end of the reporting period, which is covered by the financial statement. Then we come to the important point, which is the presentation currency. I believe that you remember under LKAS 1 we talked about this. So presentation currency is that. Then of course the level of rounding, whether you are showing it in rupees or rupees in thousands or rupees in millions, whatever that you need to specify. Okay. So LKAS 1 discusses the distinction between current and non-current items in the detail. So that we will look at shortly. But before that, I want to show you some financial statements which have been prepared actually. Okay, right. I have some past papers also. Let's see. We have the latest paper also. I don't know whether it is put in the portal, but you can see I requested them to have the latest question. Now this is January 2021. Can you all see that? Do you all see that paper, please?
Yes, sir.
Right. Has anyone got this paper?
Yes,
So
sir. Yes, sir.
I wanted them to upload it to the portal. So those who don't have it, you can get it. Better to have a printout printed and kept with you all. So I wanted them to put about 5 papers. That is about 2021 and then 19 2 papers, because 20 we didn't have a paper, and then 2018 2 papers. So altogether 5 papers. Those will be sufficient. Let's look at the January 2021 question. So again, in question number 1, you have a trial balance. Then you have some adjustments also. This is the standard structure. Let's look at the questions. This time it's slightly different. See, the structure of the question have changed. Right? Let's look at the 19 also first, then we'll come to this. 2019. March 19. There is a trial balance again, 2019. There are some adjustments, and look at the 4 questions. This is the part. Prepare following financial statements and calculations for Victory Bank PLC. So it has been always a bank that is being tested. What are the statements? Statement of comprehensive income, statement of financial position, statement of changes in equity. And the last part is a normal question which relates to theory. So you see, again and again, it is the same structure. But I think 2021 they have done a slight change where they have asked part 1 as a corrected bank book as a 3119 bank. They have brought in bank reconciliation also. Very interesting, right? Then part 3 and part 4 are normal as usual. You see, 14 marks are given for the statement of comprehensive income and the statement of financial. So what is important to note here is the statement of changes in equity has not been asked. So you should not going and doing something which is not asked also, because candidates will do certain things by practice. That is, they have used to see that you prepare the comprehensive income, financial position, and the statement of changes in equity. So don't do it. You always read the question properly. That is very important. Okay, right. So now I want you to see. Let me. Right, I hope it's visible to you all. Now this is, I have extracted it from the annual report of Sampath Bank, right? This is the accounts that was published very recently, I think first week of March, I think. So you see how they name it. Statement of profit or loss. Statement of profit or loss. Just look at the information that is containing in this. LKAS 1 requires the company name to be there. Look at this. There is Sampath Bank. Yes. Then they want the statement of the name of the statement. It is there. Statement of profit or loss. Then you need to say whether it is for the bank or the group. Now they have given it for the bank and they have given it for the group. So both are given. And for the bank, you see 3 columns. Right? 2020, 2019 and change. Again for group, you have 3 columns. 2020, 2019 and change. Now, for which period it is? For the year ended 31st December. You see? So how you read it? For the year ended 31st December 2020, 2019. And again for the year ended December 2020, 2019. That is how you read. Then, why you see 2020 and 2019? Can anyone tell me? Now you are preparing the financial statements for 2020. Then why the 2019 is there? Anyone? That is for comparison. Very good. That is for comparison. So see, all what we learn in theory is practically happening there. Right? Everything that we learn is practically happening there. Or in other words, what is being practiced is what is we learn. So the company name is there, statement name is there for the period, bank or group, 2020, 2019 means the comparison, and the change is also there. There is another important element. Can anyone pick that? There is another important element. What is that? Can anyone pick it? Or you want me to zoom it a little bit? Okay. So is it visible now? What is it? Note column. Okay, not that. Note is, yes, that is also important, but more than that, there is another important element which we learn shortly. The last slide that I showed you had this. What is that? Yes, very good. The currency, you see. Rupees 1000, they say rupees 1000 here. Did you see that? Just below the 2020, they say rupees 1000. This is very important. This is, what is the presentation currency? It is in rupees. And the level of rounding. Level of rounding. So when you read this financial statement, you have to read it. This number, let's say for example, gross income. Gross income means this much. But what do you mean by that? This is in thousands. So when you are looking at the actual number, you need to add another 3 zeros to this. So just look at it. What is the number is? Can somebody read this number? The first number, gross income 2020. What is that number? I want somebody to speak out. How do you pronounce that number? This number starting with 102, 338. Yes, come on. Somebody should read that number. What is the number is? I don't want you all to write it. Somebody should tell me. How you call it? It is? Now, if it is already in thousands, that is 3 zeros are there, then when you come here, it is 100,000. When you reach the next one, that is 8, that is million. Then you go till 900 million. Then the next point that you reach is billion. Then you go till 900 like millions, billions. Then you get the trillion. So this amount that is appearing here is 102 billion 338 million 976,000. You see? So that is a big amount. 102 billion. But what has happened? If you look at 2019, it was 118 billion. So apparently what has happened? There is a drop of 13.9% compared to last year. Right? Now you go down. Look at what is the first item? Interest income. So interest income, if you see, current year it is 88 billion, last year it is 103 billion. So what has happened? Interest income has dropped drastically. Why? That is the impact of COVID-19. Because people were not, it's not in terms of payment, but let's say there were a lot of restrictions and concessions given to the customers, reliefs given to customers. As a result, the interest income level of the banks have dropped. Okay. So this is statement of profit or loss. And now you must be wondering where this other comprehensive part is missing. Let's go to that also. You see now, what is this? Statement of comprehensive income. Statement of comprehensive income. So how they do it is, they prepare the profit or loss separately, and then they bring the profit for the year here. You see, their profit is 8 billion. You will see here, 8 billion. That 8 billion comes here. So 8 billion, they start with the 8 billion, and then they bring in all the other comprehensive income items. Then which makes it to be the statement of other comprehensive income. Okay. I wanted them to upload this financial statement so you can look at it. I also extracted the statement of commercial bank also, just for information. Now, how they have presented it? Look at it. They call it as income statement. They call it as income statement. Then similarly, you have the group and the bank, right? Then you have the same for the year ended. I enlarge it a bit. Right. Oh, that's too much. Let's make it it 175. Right. So income statement, they call it as income statement. For the year ended December 31, 2020 is there, 2019 is there, group and bank is there, notes is there. Then you have this rupees 1000, you see. So they are also showing it is in thousands. Look at their gross income. This line. How much is it? What is this amount? That is 151 billion. 151 billion. Compared to last year 150 billion. So in their case, slightly it is different. And they go on to show the profit of 17 billion. Right? Then you have this. Statement of profit or loss and other comprehensive income. You see the name? Statement of profit or loss and other comprehensive income. Then they start with profit for the year. And then they show the other comprehensive income, and that is their financial statement. Right? That is the first part. Then you have the statement of financial position. Statement of financial position. Here you will see it is as at December 31. So 2020, 2019. Group and bank. And you have the assets. Then you have the liabilities. And then you have the equity. Okay. So you see the total assets should be equivalent to the total liabilities and equity, which is your fundamental accounting equation. Fundamental accounting equation. Total assets equivalent to total liabilities and equity. And I also said in the statement of financial position and in the P&L, you need to show certain items on the face. Now, what do you mean by on the face? This is face. You see. What you see here is the face. We call this as the face. So these are the items that generally appear in a bank's financial statement. Now, even in the case of a P&L also, this is the face. So this structure is very, very important. Now, this is the same thing that you are going to apply in your examination also. Because you will be preparing a financial statement of a bank, which is somewhat similar to this. And that will have these items on the face. So this is what you have to represent or present again in the examination also. Now here, look at this number. Total assets. How much is this number? What is this number? Now you know this is in thousands. What is this number? This is 1 trillion. 1 trillion. So similarly, let's look at the statement of financial position of Sampath Bank also. So they also have a balance sheet which is of 1 trillion. You see, 1110271124. So that's a huge amount. These are huge amount. Okay. Then you also have the next financial statement, statement of changes in equity. Statement of changes in equity. So this you have to read. Has to be read in 2 pages. Okay. So this is called the statement of changes in equity. So I have requested them to upload all these financial statements to the portal. So you can go through this once you get it, or you can go to your own bank or maybe some other company. Go to the Colombo Stock Exchange website and you can get all these financial statements as you prefer. Okay. Right. So one other thing that I wanted to tell you all is, let's now we saw 2 financial statements of 2 banks. So both of them had this bank and then group. Both of them had this. There was a column to indicate the bank and there was a column to indicate the group. So what do you mean by these two? Bank is always known as the parent. We call them as the parent. That is like a mother of the entire group. Now this parent will have 2 types of companies, or maybe there more than that also. One is called the subsidiary. Subsidiary, where this parent will hold ownership, which is more than 50% of its stated capital. The second type could be an associate. An associate. Okay. This is basically, mostly it is a less than 20% holding. So it's not 50%, less than. Then we also have joint ventures. We have called them as joint ventures also. Likewise, you have various types of businesses which is held by the parent, which is held by the parent. So this is in terms of the shareholding. This is a company in terms of shareholding. So here you see the subsidiary is where you hold more than 50%. The associate is where, how do I say, between 20 and 50. Between 20 and 50. Where you hold, the holding is between 20. It is more than 20, but less than 50. Joint venture is where there are 2-3 companies getting together and forming a business. So all these are like the children of this parent. The children of this parent. So when you put the parent and children together, what do you call it? When you have the parents and the children together, what do you call it? That is a family. The name given to the business is group. Okay? In real terms, you call it as a family, but in business world, you call it as a group. Okay? So please take down. This will be useful. You need to know okay, have you taken down? So in this scenario, bank is the parent, which is the example like we saw. It could be Sampan Bank or commercial bank, that is the parent. Then they might have companies like subsidiaries, associates, joint ventures, and so on. Those are like the children. So the parent and the children are put together is known as the group. Okay. So fortunately, in your examination, you are not required to prepare group financial statements. Now, under the new syllabus, it is not there. But previously, under the old syllabus, there was a requirement to prepare group financial statements also. So now, this part is not there with you. What you have to look at is only the parent. Only look at the parent. Okay. Then we also need to know when you look at a company, the company is registered under the Companies Act. Number 7 of 2007, right? And all companies registered under Companies Act number 7 of 2007 will hold shares, right? And these shares will have a value. Generally, we call this value to be the par value. The par value. The price of the share. But if the share is traded in the stock exchange, it will have a price. But what you see in the company as capital is actually the number of shares that the company has issued into the par value is their capital actually. So that is basically known as the stated capital. So we don't call it as share capital. The name given for that is stated capital. Stated capital. This value and the market value doesn't correspond with each other. Now, based on the market, there is a price. So which you say as number of shares into market price per share. Number of shares is the same thing, number of shares, but here it is not the par value, we are talking about the market price of the share. This gives you something known as market capitalization. Market capitalization. This is very important. For a company, for their marketability, this is very important, this number. Market capitalization. What sort of a capital strength that they have in the stock exchange. That is what market capitalization tells you. So it's very important. Was on this factor. So company, what do they do when they want to raise more money or when they require new money to come in? They can issue more shares. They can issue more shares, provided they have it in their articles of association. In their articles of association, they have to say they can go up to this level to issue shares. So when they want money, what they do is they look at various options. What are the options available for them to raise money? So the most common way of raising money is where they go into something called rights issue of shares. Rights issue of rights issue of shares. So rights issue of shares is where now there are shareholders, existing shareholders. From these existing shareholders, you ask for money. You ask for money. I need a requirement, so please give me some money. So what you do, you create a mechanism that is issuing rights to these people. So those people will get motivated to purchase these shares. So they will apply a formula. Say for example, if you have 5 shares now, you get 3 new shares. If you have 5 shares, you get 3 new shares. That's a formula like. But these new 3 new shares will be at a price. They'll say at 110 rupees. At 110 rupees. So what they do, if they like to have these new rights, they will go and purchase it. So when they purchase it, the company will get money which will increase their stated capital, because at that time this will be considered as the par value. So your stated capital will go up. This part is totally different. That is something different. Because anyone can go and buy shares in the stock market at any time. But that won't change the stated capital. Stated capital can change only when the company issues new shares or create new shares. You have to remember that. Not because of the existing shares being traded, no. Stated capital won't change. So it is very important for a company to give particulars about their stated capital. They have to give information about stated capital. What happened during the year, how much of shares issued, whether they have a new shares issued by the company. So a lot of things have to be there. This is so one way of issuing shares. Right? Now there is another way of, if you want, just take down this. I just want to erase it. Okay, right. So issuing new shares is one way of your stated capital being increased, right? But what happens in that case, money is coming into the business. Money is coming into the business. So when you need more money or more capital, you do that. Now, to the shareholders, what do you give? What do you give? When your performance is good, you will give them something. What is that? What do you call it? Anyone? What do you give to your shareholders? Yes. You give dividends. Now these dividends, when you give dividends, what actually needs to happen? You have to pay it out to your shareholders. So dividend can be paid in the form of cash. You have to pay. If somebody is holding 100 shares, if your dividend is 6 rupees per share, you have to give them 600 rupees. That is one way of paying dividends. Now, if you are a company where you don't have that much of cash, but you still want to pay dividend, still you want to pay dividend. but you don't want to give out cash also. You don't want to give out cash also. So you have an option where you can give the dividend still, but in the form of shares. In the form of shares. Let's say a company is willing to give dividends of 6 rupees per share. 6 rupees per share. So you don't want to give everything in cash. Everything in cash. What do? You give 2 rupees in cash and 4 rupees in shares. Okay, 4 rupees in shares. So don't ask me how these 4 rupees can be given in shares. There is an underlying formula which the company will calculate and will tell you how much or how many shares this 4 rupee is worth. How many shares this 4 rupee is worth. So that amount of shares will be given. Now, this method of giving dividends in shares is known as scrip. SCRIP. That is known as a scrip dividend. A scrip dividend. Okay. So please remember that these are not in the handout. That's why I'm explaining it, because it will be important and you might be tested in examination also. So this scrip dividend will not have any impact on cash. Okay. Scrip dividend will not have any impact on cash. So what do you do actually? You convert your profit that you have earned into shares, which means stated capital. So you are converting your profit into stated capital. Sorry. Therefore, no fund outflow. There will be no fund outflow. Money is not going out. It's just you create using your profit into stated capital. This is what previously known as bonus shares. We call it as bonus shares, issue of bonus shares, where you capitalize your profits to issue shares. You capitalize your profits to issue shares. Please take down. Appreciate if you can mute yourself. Somebody is unmuted. This is just for your knowledge and understanding. You can avoid giving cash as dividends. Instead, you give shares, and that is known as scrip. So what do? You create, you convert your profits into capital. So no money going out. That is a benefit to the company. But the implication, what is the implication? Now this time you would have issued dividends on certain number of shares. But when you go to next time, what will happen? The number of shares has gone up. So you might have to pay, if at all, if you pay cash, you will have to pay cash on a higher number of shares. So that is depending on the liquidity strength of the company. You have to manage your business accordingly. Okay, that is what all about stated capital and those stuff. I will also show you going back to the financial statement of these companies or the banks. I have also given the statement of cash flows. Don't try to look into it right now. Just have it for your information. Right. This is the notes. As I told you, these are the notes to the financial statements. Right. You can just go through. I have just taken 2 pages. You see the theory that we talk about: materiality, comparative, going concern. All those are there, right? Okay. If you go through in detail, there will be a lot. But I have just extracted 2-3 pages, I think. You can go through those. Even in commercial bank, I think they have given. And I just want to show you, right? Look at this. This is very interesting. Now, this is commercial bank's group structure. Just have a look at it. What do they say? They have a group, which is the commercial bank is in the middle, the parent, right? They have subsidiaries, and they also have, local subsidiaries as well as foreign subsidiaries, and also an associate is there. So you see the shareholdings, 90%, 100%, 100%, 60%. This is 22.92%. That's why it is an associate. The rest are also subsidiaries, 100%, 55%, which is more than 50, then 100%. So this is just to give you a flavor of how this group structure is. And then you also have information about other details on the financial statements. And also, if you go and look into the financial statements in the website, you will see there is adequate information on the policies as well, right? Policies as well. Now, when we talk about the statement of financial position, we have different types of presentation. Now, when you look at a bank, when you look at a bank, the way a bank presents its components in the statement of financial position might differ from a normal trading business. From a normal trading business, I'll try to get a set of financial statements of a trading company also, and get it across loaded to your portal so that you can have an idea of that also. Those two will differ. The difference will come in the form of the way you present depending on the liquidity of your company. Now, banks and financial institutions are highly liquid companies because they depend on a lot of finance. So as a result, they present their financial statements in a particular order, which is known as in the order of decreasing liquidity. Decreasing liquidity. So when you look at their financial statement, I will show you, they are in the order of decreasing liquidity. Look at their financial statement. Right. This is the statement of financial position. Just look at these items. Some of the items you might not know right now. But look, what is the first most item? Cash and cash equivalent. Cash and cash equivalent, which is the most liquid item in a bank. But when you look at trading company, they prepare financial statements in a different manner. They prepare it in the order of increasing liquidity, So banks and financial statements, they prepare in the order of decreasing liquidity. So most liquid item is here. And when you go down, you see property, plant and equipment, investment properties, other assets, all those are. So in the order of decreasing liquidity. But when you look at a trading company other than a financial institution, those will be in the order of increasing liquidity, Okay, so let's make a note there. Financial statements of companies, especially in the case of the balance sheet, within brackets you say SOFP, statement of financial position. The items on the face, are presented in the order of liquidity, Next line. Banks and financial institutions present them in the order of decreasing liquidity, whereas trading and other organizations will present it in the order of increasing liquidity. Okay. Right. So let's wind up for the day and meet up next week. Probably I would start with SLFRS 9, even though we might not have extended time, but we'll see We'll start off with this IFRS 9 on next week. Okay. So have a pleasant weekend and take care of yourself.